Hey, good morning, folks. It's Terrill with Bell Mortgage, and today's Thursday, May 8th. It's about 9 o'clock in the morning in Arizona. I want to give you an update on mortgage trends this morning and also go over a couple of other things. Bonds actually opened up quite favorably this morning. They were up about 9 basis points when we opened up this morning. We're starting to lose that gain. Right now, on the day, we're off about 12 basis points, so we're going to make a recommendation. If you have a loan in process with a lender, carefully watch that. As we have seen a reversal in the trends on bonds this morning, and we might see a possible uptick in rates a little bit this morning. So keep an eye on that. Call your lender, talk with your mortgage company. If you're writing a purchase contract with your realtor, have the property identified and the contract's going to be accepted today, do get in touch with your lender and talk about locking or at least watching the trends on that mortgage company. Your mortgage lender, of course, should know the trends. If not, you can always call me. I can be more than happy to help you on that as well, give you some direction. I can be reached at 480-753-6100. But right now, we're going to have you carefully float your interest rate as we see some reversal. But we're still flat on the day, so don't jump to conclusions yet. Next thing I wanted to talk to you about was FHA loans. FHA mortgages have become a very big part of the real estate cycle in trying to finance them. It's about the only option that hasn't been affected by two things: the down payment required, which is still 3% down, which of course can be from a down payment assistance program from a nonprofit agency. The other thing I wanted to talk about is they have not been affected by the declining market rules that Fannie and Freddie have put forth. What the declining market rules are is that whatever your maximum financing or whatever your maximum loan to value was in the past, if the property is deemed or identified in a declining market, there's an automatic reduction of 5% to the maximum loan to value. So if you had a 95% or a 5% down mortgage, it's now limited down to 90%. Now this comes in two different fashions. Number one, that the agencies, Fannie Mae, Freddie Mac, have identified through their automated underwriting systems, through zip code searches on properties, you'll have an identification of the property being in a declining market. The other thing too is that because you have been limited on second mortgages, there was a day where you used to be able to do those 80-20s and those 80-15-5s, and people did them. They did an 80% first mortgage and they backed it up with a 15% mortgage or a 20% mortgage to avoid PMI. Well, the problem is that the ability to get those second mortgages doesn't exist anymore. Several lenders, several big banks, won't mention any names, but have limited sometimes up to 75% on second mortgages. So ultimately, if you're doing a conventional loan and putting down 5-10%, assuming you can put 5 to 10% down, you are going to have PMI. Now here's the kicker. The PMI companies now are coming out and saying, well, this particular secondary investor might allow you to go to 95% to borrow on a $450,000 home, but the mortgage insurance companies or the PMI companies are not willing to insure it, so they won't do anything over 90. So you have a secondary investor or a mortgage company says, well, we can do 5% down mortgages, but the problem is that they might be able to do that, but in order to do that, they have to have PMI insurance. The PMI companies are coming out. That was and saying that they are not able to do that. So going back to FHA. FHA does not have a declining housing market rule. Interest rates typically on an FHA loan are going to be significantly less than a conventional loan. On average, we're priced about 0.25% better than conventional financing. In Maricopa County, you can finance up to $346,250, which, if you look at our market, covers probably 70% of the available housing as far as prices go. The other thing is that we process, underwrite, fund, and close all of our own FHA loans. So we're hearing horror stories from real estate companies, from title companies, about mortgage companies or our competitors' inability to get these loans done, sometimes 45, 60 days. We're getting them done in 5 to 7 days. So if you have an FHA loan and you want some help, not only I've been working on FHA loans for over 20 years, so it's a good thought. please call me if you have any questions about that. It's our expertise. It's what we do. We do FHA loans, and we're not reliant to have to broker it out like some of these other mortgage companies are. So please think about that the next time you're looking for FHA financing, or if you're a realtor and are looking for FHA guidance, especially writing purchase contracts, or just general rules. I'll be more than happy to go over that with you as well. Again, my name is Joel Terrill. Today is Thursday, May 8th. It's about a little after 9 o'clock. Bonds are still flat, and I hope you have a great day.